Good morning, everyone. My name is Eric Senft, and welcome to our Wednesday morning trading session. Hang on here a second while I get to my monitor so you can see what we're doing here. What you're looking at here is the Diversified trading system. And it's diversified because we're looking at the market from 3 different points of view. So we've got a different tool to give us signals depending on what the market environment happens to be on this particular day or any particular day. Here in the top left, we have the Hawk Micro Scalper. Top right, we have the Falcon Swing Trader. Bottom left, we have the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. This is the Raptor. The Raptor is a little bit of a hybrid. It incorporates elements of the Hawk, the Falcon, and the Eagle all into one trading tool. Regardless of the tool, the signals all develop the same way. First, we get a warning dot along with an audio alert. And then when the signal parameters are met, we get a triangle and a hash mark. That tells us that it's decision time. It's time to make up our minds whether or not we want to take this signal. Now, there's certain high probability signals or setups that we're going to focus on. The one you're seeing here on the Hawk right now is actually one of them. It's what we call our first micro-macro crossover signal, which tends to be a very high probability signal, but it's only a few minutes out of the open. So I don't want to get too excited here, especially since the last week and a half or so, the market's been a little bit sideways bound for the most part. But we'll throw that order in there just so I can perhaps show you how some of these tools are working. The market I'm focusing on right here on this monitor is the NASDAQ. I'm also following soybeans and crude oil, but please don't be shy. Ask for any market if you would like to see. I'm sure there's probably an E-mini trader or two in our midst, or gold, or some of the currencies, or whatever. And please feel free to ask questions as well. All right, so that was the Hawk that we were looking at there just a moment ago. Let me show you the Falcon. The Falcon, what we're concentrating on for our directionality is this trend line here. When the trend line is green, we're looking to buy. When the trend line is red, we're looking to sell. Again, there's higher probability setups that we look for. For instance, this signal right here is what we call our late filter entry signal. So it occurs when the filter goes out of sync, comes back into sync, but the trend line never changes color. That's a high probability signal. So when all the parameters are met, the signal prints, and you can see we had some decent follow through from there. Right now, we're still kind of getting our bearings, maybe working on a trend change signal lower. A sell signal might be coming up here. The trend line has changed color. We've got this little down push that's changed the trend line color. Now we're watching the buyers try to fight it back. And if they're unsuccessful, we're going to produce a sell signal here, in which case we'll look to short. While I'm on the Falcon, I'm going to point out these horizontal lines that you see here. Those are the ultimate support and resistance suite. What that means is this is an add-on tool. It's not native to the DTS package, meaning you can use it on any chart. It's a standalone. You can use it on a 5-minute chart, or an hourly chart, or a tick chart, or whatever you like. The Ultimate Support and Resistance Suite forecasts 21 support and resistance lines for today. No, they are not floor pivots, and no, they are not Fibonacci retracements. They're actually much better, and I'm not saying that they are. Much better. So you see, we're kind of pinned right now between the secondary resistance up here and the median line. That's the gold line. If anything, the market seems to be skewered by the primary resistance line at the moment. But we'll put that away and we'll see what goes on from here. Okay, so now our trade has retreated quite a bit. We're actually producing another signal. This is what we call a green bar sell signal. Now the green bar sell is a little bit of a lower probability signal, so I'm going to dial down my risk exposure a little bit. And we'll look to take it just one tick below the current formation. The tool you see me using here on the right, this is the Trade Manager. Now I'm going to delete my profit target and break even just so that I can show you how the Trade Manager works. The Trade Manager has two components. It has this risk component down here, which I'll get into in a minute. And then we also have the Profit Manager portion of the Trade Manager, and that includes 16 stop strategies, all of them fully customizable. So what those look like, I'm going to start with the swing high, because I don't want the stop too tight. So you see these blue dots here? Once I enable those, watch what happens with my stop. Trade Manager has now taken my stop, and it will manage my trade according to the stop strategy. So what that means is, well, it's pretty much hands-free is what that means. I don't need to monitor this trade so closely anymore. Oops. There we go. Alright, so I'll just hold my stops where they were. And the Trade Manager will automatically manage this trade for me now. So I'm hoping that we may see the market drift a little bit lower here, and I'll show you how the Trade Manager will automatically roll the stops for me. Maybe not. Now we're producing a first micro-macro cross signal higher. It hasn't triggered yet. We only have the warning dot. I do suspect we're going to see a little bit of a sideways day. You see on the hawk here, on the scalper, how we're producing all these yellow bars at more or less the same latitude. That's usually what happens when we get a sideways trading day. See, here was yesterday. Lots of yellow bars, all on the same latitude. So you expect the market to be more or less sideways, which means you got to run some pretty wide stops. Now, I know a lot of you were looking at this trade when I first put it on, and you were saying to yourselves, oh, Eric, that's a stupid trade. You're risking $100 and your profit target was $50. That's a backwards trade. That's not a 2-to-1 or 3-to-1 reward to risk ratio. No, it's not. I'm basing the trade on the probability of the setup, not on some fictitious risk-reward ratio. Because the Achilles heel to the whole risk-reward logic is the reward side of the equation. Right? That's the only part of the equation you have no control over, is the reward side. So why would you base a decision to take a trade or pass on a trade on something that you have no control over? Good question. So what we do is we base our trades on the probability and the things we have control over, namely the risk. We can cap the risk. I can set up this trade. I've currently got it set at 1% of my capital, so that if this trade goes sideways and I get stopped out, I've capped my risk at 1% of my trading capital. And what that does is it takes a lot of pressure off of your trading. I don't have to worry about keeping my stops ultra tight and hope and pray and beg the market to head, in this case, lower. If the market reverses and goes higher, okay, well, I was perhaps a little too quick on the signal. Maybe I should have recognized the market was more sideways. Maybe it was just flat out too early. You know, there'll be something that I did that I can avoid in the future. But you don't want to base a trade on a fictitious reward part of the equation, because in that case, you know, I would have entered here, I would have looked down here and said, this is my reward, so I can only risk a third of that, right? So you end up putting your stop here, you end up getting brought in, the market stops you out, you don't even have a chance to get to your profit objective. And that's your profit objective. You don't know where the market's objective is. What if the market's objective is down here? Well, shoot, then you could have risked a stop way, way up here somewhere, right? It's, as you can tell, I'm not a big fan of risk-reward ratios. And I can see the room members' eyes glazing over. Please, Eric, don't go there again. I get a little bit passionate about that. All right, so the signal, it just hit our profit objective, and but I'm going to try to run this out, so hopefully I can show you how this tool rolls the stops down. But we did just hit our high probability profit target, so you could already have banked a profit on this trade. Thanks, Arthur. Arthur says that makes great sense, and it does when you think about it. And I've got more materials on this subject if you'd like to learn a little bit more about why you should be trading probabilities and not risk-reward ratios. Feel free to drop me an email, and you'll probably get a little bit more information than you care to know. But the true secret of trading is trading probabilities and never risking more than you can afford to lose. All right, so it looks like we got a little bit of buying going on here, as there's no doubt traders seeing a little bit of a trend line developing. And while we're waiting for that to get out of these yellow bars, I'll show you quickly the Eagle and the Raptor. Now, the Eagle is our trend trading tool. You can see the last couple of days, not really a trending type of day, so didn't get a whole lot of signals here off of the Eagle. Again, we're looking for some higher probability setups. This whole week has just been sideways. Let me get back here a little bit. Here's one of our high probability setups. With the Eagle, we've got this band or cloud. No, it's not an Ichimoku cloud. I know it looks like one. You can talk to the programmer about that, but no, it's not an Ichimoku cloud. But it does give us our directionality. And like an Ichimoku cloud, it also acts as resistance when the market trades into it. One of our high probability signals with the Eagle Trend Trader is this one right here. It's called the green bar sell. And that occurs when the market drifts into the cloud, hits the hard edge. That's what we call the hard edge, this part right here. And whenever the market encounters the hard edge, we expect a reaction. In this case, we got a high probability signal to sell, and you can see we got some decent follow through from there. Here's another green bar sell back here. Here's just a regular hard edge bounce. But these are all high probability signals for the Eagle Trend Trader. You can see that right now, however, nada. I suppose you could consider this a green bar sell. The market's kind of waffling a little bit, though. You see, we don't really have much of a trend established yet. The green bar sell is more of a continuation pattern. We'll see if this next one produces. We're producing green bars with a sell signal. That one might be worth a try. It's being held up by the same trend line that we're just looking at on the hawk. All right, so there's your Eagle trend trader. Oh, this tool here in the top left, this is another one of these add-on tools. That means, of course, you can use it on any chart. It's not just DTS. This is a standalone. And this is called the Trade Forecaster. The Trade Forecaster attempts to tell you what the current market environment is and what the next one's most likely to be. So right now it says we're in trend mode, and we're going to be in for about another little more than an hour, after which we're going to be moving into swing mode. Well, that would be very welcome. Market hasn't really started trending yet, but hopefully soon. Alright, so we're still waiting for them to take out that trend line. I'll show you the Raptor. The Raptor, as I mentioned, is a little bit of a hybrid. It incorporates elements of the hawk, the falcon, and the eagle all into one tool. And you can see it's borrowed here from the eagle. We got the cloud. In fact, we got two clouds. The Raptor has a double cloud. Some of the bar colors borrowed from the hawk. Yes, you can change the bar colors. You don't need to go with blue and fuchsia. That's usually the first thing people ask. Can I change the bar color? The Raptor signals, again, we're not focusing on every single arrow. Normally we're looking at high probability signals. This is one of them right here. I know you can't see it very well. The hash mark printed right on the hard edge of the band. This is what we call a soft edge sell. It's a counter trend signal, and you can see the market fell off nicely. Now that we've changed direction, this would be our cloud crossover signal. You may have even considered this one a cloud crossover here. It occurs when the clouds cross over. We expect the market to retreat into the cloud, and then the cloud bounces the market back out. So I suppose technically this is the cloud crossover, as this one didn't retreat into the cloud. So there's your cloud crossover signal. And where are we at right now? Oh, well, right now we're in limbo is where we're at. Don't really have any directionality on the clouds, so, well, we got a sideways range. It's what we have. People always asking me, Eric, how do you trade a choppy market? Well, truth be told, if you want to make money, you stay out of a choppy market. If the range is large enough, you can look to buy the bottom end of the range, and you can look to sell the top end of the range. Traditionally, as the market gets into the bottom third, the buyers get more aggressive, and as it gets into the top third, the sellers get more aggressive. This will go on back and forth until prices finally break out. So as a trader, if you don't want to try to, sell the top end, buy the bottom end, which is really only practical if the range is large enough. I would not consider this range to be large enough. If the bottom end of the range was down here, then okay, take your chances, because maybe you'll get enough out of a bounce that you can scalp out, or maybe even take a tiny little swing. But otherwise, the smart thing to do is to let the market break out and retest, and then look for your sell signal. Let the market break out, retest, and then look for your buy signal. Now, I know you're saying, well, Eric, what if the market breaks down and just takes off like a shot and doesn't give me this retest portion so I can get back in? Very unlikely. Why do I say that? Well, if this is in fact a sideways trading range, where are the buyers buying? well, they're buying down here. They're going to buy down here. They're going to buy down here. They're going to buy down here, especially as the market gets back toward these lows. Therefore, sooner or later, they will bounce the market. Once they bounce the market, well, then it will be up to the sellers to prove that they can hold the breakout. The opposite, of course, is true on a breakout higher. Okay, it looks like we're finally getting a little bit of traction here. Let me take you back to the action on the hawk, and hopefully I can show you how the stops work. All right, so now we've got a little bit of open profit here. I'm going to change my stop strategies. Maybe I'm going to go with the ATR, and all I need to do is click accept, and watch what happens with my stop. Ooh, look at that. Now the trade manager will manage my trade according to the ATR strategy. And like I say, you've got all these stop strategies. There's 16 in all, and you can customize them exactly how you want. If this seems too tight to you, well, you can dial back the parameters. Make it a little bit more liberal. If you think that's too loose, well, then you can make it tighter still. Or perhaps go with something more aggressive like a parabolic strategy. And you can preview these before you put them on. So maybe you want a parabolic strategy. So now the trade manager will manage your trade according to the parabolics. And there we go. So we just got tagged on this trade via the parabolic stop. Pretty cool, huh? It's actually a very powerful trading system. Between the risk component here and the trade manager component, you have all the tools that the big boys on Wall Street have. In fact, I have never seen anything like this available to the retail trader. And I'm not just saying that. When Adam first told me what he intended to do, I said, can you even program that? You need a computer the size of, you know, your desk. But no, he got it done. And he likes to share this story, so I'll share it. One of the programmers behind programming the trade manager, this tool here, he also programs, his day job is programming missile guidance systems for the U.S. government. So you know this programming is tight. So anybody who can program a cruise missile is probably a pretty good candidate to program a tool like that. This isn't just your, you know, run-of-the-mill 14-year-old in the basement pounding away at a computer. Andrew asking, Eric, why do you favor the NASDAQ over the YM when they're both $5 a tick? Great question, Andrew. Let me see if I can get the YM chart up here. So here's the YM on the Raptor. Today they're actually pretty similar. And for the most part, the moves on the YM are a little smoother. But the NASDAQ does tend to have a little bit more volatility. Now that can be a good thing and a bad thing. So let's say we took the, where was that cloud crossover we were looking at? Back here somewhere. So clouds crossed over. So this is our cloud crossover signal. So it engaged, is that right? 954 last night? Is that the same signal? I'm trying to find a comparable signal so I can show you the volatility. Yeah, I guess it is. Okay. So we'll back here to the YM. So the YM signaled back here to sell, and we took a little bit of heat on the trade, nothing too serious, a little bit sideways, and then the market fell down, right? Made low. And what I should do is, no, all right, we'll leave it like that. The NASDAQ during the same period the YM actually triggered a little bit earlier. The NASDAQ didn't trigger until here. Actually, that's one example. I was going to say that the NASDAQ was going to have bigger follow-through, but that's one example where the mini Dow, the YM, actually had better follow-through than the NASDAQ. It's a personal preference, really, is what it amounts to. There's nothing wrong with following the mini Dow. Like I say, its moves tend to be a little bit smoother, although sometimes not always as pronounced as the NASDAQ. I used to follow both when I was doing the profit run. I'd actually have them side by side. I'd have the NASDAQ on this side, and I'd have the mini Dow on that side. And they duplicate signals. Here's a little fun fact, and those of you in the trading room are not allowed to answer this question. I'm hoping I can get somebody new to answer. Hold on. How many trades should you take in a day to make a living, a decent living trading? Or, if you don't want to focus on how many times you trade, what kind of dollar amount should you be looking to earn? I hope that makes sense. Oh, Tony says we got a potential late filter entry brewing here on the Falcon. Tony's liking those. You keep pointing them out to me, and I appreciate it because I get sidetracked doing stuff. Yeah, filter is out of sync. Trend line currently holding. If this trend line continues to stay red, we get this bounce off the primary resistance, we could well see a late filter entry signal develop here. Okay, I got a couple of wise guys from the room. It's right here. Stephen actually gives me a half well thought out answer, so thank you for that, Steve. Steve says, as many trades as it takes, as the market gives us. Yeah, that's not a bad answer. Most people are surprised to learn that you really only need 1 or 2 or maybe 3 trades in a day to make a living. Now I know you're thinking, what? 3 trades? 2 trades? They've got to be like huge home run trades. No, they don't. They have to be $50 winners. What, you say? $50 winners? How can that be? I can't make a living on $50. Shoot, I blow $50 on lunch. The reason most traders are unsuccessful trading is because they overtrade. No, I know Steve. Steve says I was just joking with you. I couldn't get anybody else to answer, Steve. Okay, so for the benefit of you who have never heard this before, and the rest of you, you can go get yourself a coffee. I'll be done in a minute here. Most people are surprised to learn that you only need to take 1 or 2 or maybe 3 trades in a day, and that you only need to have a $50 objective on each of those trades. Well, how can that be, you say? Well, because trading is not like manufacturing. You know, it's not like the brick and mortar world where the more you do, the more you earn. See, that's the mistake most people make. Out of all the people who come to me for coaching over the years, I guarantee you 90% of them overtraded. So they'll look at a tool like this, they're thinking, okay, you know, should I buy the Raptor? Well, let's see, there was a signal here. Okay, that one worked out. There was a signal here. All right, well, the market went against me a little bit, but it worked out. There was a signal here. There was a signal here, so I could have taken 1, 2, 3, 4, 5, 6, 7 signals. No. You want to take one or two or three high probability signals, and you want to hit your high probability profit target. After that, it becomes a numbers game. What do I mean by that? Well, let me show you here on the hawk, because I have a little bit more flexibility on the hawk. So my risk is set at 2%. So we had our signal back here, our green bar sell. So watch what happens when I put my stops at different levels. Let's say I put my stops right here. Okay, my risk is capped at 2%, but I'm trading 8 contracts. So when I hit my profit target, I've made $400. What if my stop is a little bit further away? Well, my risk is still capped at 2% of my account, which is still $400, but look at what happened to the quantity traded. It's been reduced, right? So these are $50 targets, by the way. I can go here to manual mode in case you don't believe me. See, it's a $50 target. So it's the quantity that you're trading, not the quantity of trades, but rather the quantity of contracts. So when you cap your risk, when you control your risk, and you cap your losses and you maximize your earnings, you have quite literally discovered the best of both worlds. If this trade goes sideways on me and I lose, I've lost nearly $400. Yes, very unpleasant, but it's only 2% of my trading capital. So if you're trading a $10,000 account, that's $200. That's not going to wipe you out. At the same time, if the trade does work out, I've maximized my earnings, haven't I? Because I've maximized my exposure to the market. I've minimized or I've capped my losses and I've maximized my profitability. So after that, it becomes a numbers game. Did you know, well, you probably didn't know, but if you trade twice a day, 2 trades a day for $50, and you trade 25 contracts, you will make $500,000 a year, $500,000 on 2 $50 trades. I know you're saying, well, Eric, that's great, but I can't afford 25 contracts. All right, well, maybe you can afford 5. I know there's a few high equity traders in the room here with me this morning. They can easily afford 5 contracts. That's $100,000. $100,000. Okay, that's not too bad. All right, what if you're a smaller trader and you can't afford 5 contracts? Well, 3 contracts, that would be $60,000. Can't afford 3, 2 contracts, or $40,000. Even if you traded 1 contract twice a day for $50, that's $20,000 a year. That's something. You'll do a whole lot better than you're doing in the bank, or your GIC, or IRA, or whatever it is you got your money stuffed into. And isn't the objective here to make money? Of course it is. It's a stupid question, I know. And yet, so many traders get caught up with the methodology. They lose track of the target. And the market's just going sideways here. That's why you get my little rant. But so many traders forget about that. They lose their focus. They get caught up in the game. Shoot, there's less expensive hobbies than trading. And besides, it takes a whole lot of pressure off your day when you realize you only need to find 2 trades or maybe 3, or maybe 4, but rarely more than that. You can afford to be picky. You can afford to be very picky. Right? You don't have to take, like here in the hawk, for instance, you don't have to take one of these yellow bar signals. We don't take yellow bar signals, by the way, in the hawk. They're low probability signals. Or you don't have to, take a trade and, let's see, where can I find an example? You don't need to take a trade and jam your stop in super tight, hoping the market gets up there. You can leave yourself a reasonable stop. So you can take your trade and you look back and you say, well, okay, there's some support here, but it looks like the support is stronger down here. Maybe I'll leave my stop down there. See, I'd still be in this trade. I'd be sweating a bit, and by now I'd probably start to roll my stops up a little. But it ain't a stop out until it gets hit, is it? It ain't a loss until you get tagged. I can leave this down here all day long, and even if I do get stopped out, I've still contained my risk. Yes, a $400 loss would be unpleasant. But I've spoken to people who have blown up $20,000 and $25,000 accounts in a single session. Talk about lack of risk control. I don't want to say they deserved to lose it, but you'll understand what I mean when I say that. All right, well, we're just kind of watching the NASDAQ go. Crude oil, not much going on in the crude oil market at the moment. I do believe crude inventory is due at the bottom of the hour. So we'll look at maybe doing something with crude oil at that point. In the meantime, back at the ranch, like I say, if you have any questions or any markets you'd like to see, let me know. Here's soybeans, just for a change of pace. For those of you who have never entertained one of the grain markets, soybeans, very good market actually. Nice way to round out your market mix. The thing with soybeans is once they settle on a direction, they usually go a little ways. Here was the first micro macro cross lower. It's one of our high probability signals. I do believe that was enough to hit our high probability target. Yes, it was. You can see here during yesterday's North American session, pretty much sideways. All right, let's put that back on the shelf. That was the hawk in the soybean market. Here's the same market looking at from the perspective of the eagle, and you can see also very, very sideways. Not much of a trend developing the last few days in soybeans. It'll pick up soon. It's almost the new soybean season starts in September. Steve's asking, what's the symbol for soybeans? ZS. And for you Americans, that would be ZS. I'm here in Canada, so we still call it Z. Lauren is asking, when's the best time to trade soybeans? The regular North American hours are typical for soybeans, so pretty much the same hours that you'd be trading the index markets. They close a little bit earlier than the indices, but they're worth a look. During the winter months, they do get a little quieter. Yeah, I know. You're looking at the chart, you're saying they're not quiet now. No, they'll pick up in another month or another week or so as we kind of work our way through the summer blahs. But they do get very stagnant sometimes during the January, February. Sometimes the weather will still spark the market. Usually then it will be transportation concerns. All right, so we're just kind of humming and hawing. Crude oil, I guess we may as well take a look here. We got crude inventory out in about 18 minutes time. This is crude oil on the Falcon. We can do this on any of the charts. I just picked the Falcon. And what I like to see for crude inventory is I'd like to see the market actually establish a little bit of a range and then be trading in the middle of the range. That allows me to use my OCO function. OCO stands for one cancels other. And what that does is I can place my trade on the chart. Now the OCO function, these trades are live the moment you put them on your chart, so what I tend to do is put them away and then drag them in to where I want them to be. Now with the OCO also, you're going to you can do more than one OCO order. So if I toggle it on and off, I can put another order up there, and I can put an order down here. Let's move that one a little bit further away. And you see they're designated. OCO2 matches OCO2. If I toggle it again, I can add even more orders. I'm not sure why you would want 3 OCO orders on your chart, but there you go. It's available to you. Or you can put a dozen on your chart if you want. When I cancel the one order, the corresponding order is going to automatically cancel. That's what OCO means. One cancels other. So watch, I'm going to cancel OCO3. This one up here is going to automatically delete. If I cancel OCO2, the other one cancels, and of course, OCO1. So going into inventory report, as I mentioned, I'd like to see a range, and then I can bracket the range. I don't really have much of a range this morning, though. Well, I do, but it's very, very congested. I may opt for buying above the primary resistance and selling below the primary support, seeing how the market is pretty much stuck on the median line at the moment. The other way to trade crude is you can let the inventory report hit the floor, let the market absorb the news, and shortly after the report is released, it will tend to make a little bit of a range, and then you can bracket that range. But it is a demo room, so maybe I'll show you both ways of doing it. I'm just going to change take my break-even trigger off. So I'm going to turn off my trade manager so I can make some changes. I'm going to disable my break-even function. And now I'm going to turn it back on. Because if the market gets a little bit whippy, I don't want to get tagged on break even. Rather, I'll let my stop strategy do its thing. Maybe we'll go with the chandelier stop. What does that look like? Yeah, that's pretty close to the middle. Oh no, it's way down here. That's where my entry is. Okay, let's try something else. Maybe. Oh, I don't use the percentage stop very often. Let's try that one. All right, it's a little bit tighter than I normally go with, but maybe we'll try that today. All right, so we'll turn the OCO on. We'll buy on a break of the primary resistance. We'll sell on a break of the primary support. Make sure my stops are enabled. Okay, now everything's automated. All right, as we're waiting for that, we're going to put this on the shelf. Let's get back to the action on the NASDAQ. And the NASDAQ following through a little bit on our green bar sell signal that we pointed out before. I missed entering this green bar sell here, which was a subsequent one, and now we're getting a hard edge bounce. So we're getting a few signals here to short the NASDAQ. Not liking that it's almost making a little bit of a triple bottom here, but we do have an opportunity to get in on the second push. So it is a demo room. I may as well demo. Now that stop's a little bit cozy. I'd probably be better off placing my stop a little bit higher, but we'll leave it at this. We'll leave it where it's at. So the second push entry strategy is simply allowing the market to engage the signal, let it retreat from the signal, which it very often will do because this is a sensitive point. That's why the signal is printed there. It's kind of like a tipping point. And what we're looking at now is we're looking at the market to pick up some fresh downside momentum to push prices lower. And if they do that, well then they'll bring us into this trade. Okay, crude oil's getting a little bit more active here, so let me bring the crude oil chart over. As traders are jockeying for position before the inventory release. It amazes me how often the DTS tools will actually get the market direction right before the report is released, before the inventory report comes out. Maybe we'll give them a little bit more room. So in this case, if we come back here with a buy signal, providing the green line does not change color, we would have a late filter entry signal to buy. Okay, about 10 minutes still before the inventory release. If you wanted, you could also buy above the high here, short below the low here, seeing how the market's more or less within that range, right in the middle. Crude's a little itchy. We may actually see a big move this morning. Tony says he took a late filter entry signal on the mid cap. That's the EMD, the S&P 400. Took a little profit on one. He's got a runner in play. So hopefully that works out for you, Tony. I'm with you. I think the stock market is due for a correction. Tony's looking to trade it down a little bit. He's short. All right, so I just heard the Eagle trade engage. I want to make sure I have a stop in play, and maybe I should automate my stop. Yeah, that's not bad. I'll go with that. All right. So I'm now going to let the trade manager manage my trade for me while I concentrate on the crude oil market. And the market just dead neutral here at the moment. All right, what do we got? A couple minutes yet, 6 minutes before the inventory release. So I'm just babysitting this trade so that the market doesn't get too close to either of my entries. So remember, there's two ways that we can do this. Way number one is that we try to bracket the current range. In fact, I could even bracket down here below the overnight lows. Way number two is to let the inventory report release, watch the current range develop, and then bracket that. I'm always double checking, make sure my stops are turned on. When you're trading or trying to trade a crude inventory release, you want to make sure you've got those stops working. All right, so about 5 minutes yet on that. Let's see how the Eagle trade is doing. Oh, it's there. They're trying. We've got our break-even trigger in play. Say I've got my break-even. That's my auto break-even, and these are all adjustable. You can set these up whatever you want. My high probability profit objectives, again, you can change those if you like. Come on down. You know you want to. Take out that 4810 area. Come on, somebody. Don't make me bring the magic mouse out. I hate influencing the market this way, but I'm going to pull the market down here for a second, just so you can see how this works. Come on. There we go, just pull prices down. All right, it'll take a minute for that to come around. And, oh, here, while we're waiting for crude oil, I haven't explained the Geiger counter to you yet. You probably noticed this on the Raptor when we were over there. The Geiger counter, this, again, one of these system add-on tools, which means it's a standalone. You can use it on any chart. The Geiger counter is essentially a tape reader. Got to get a little bit of history going here, and you'll see the time and sales. You'll also see the time and sales here, and we have this dial around the tool. When the dial pulls hard over one way or the other and sticks there, then we can normally anticipate some sort of follow through in that direction. It shows us the buyers or the sellers trying to chew through all those orders. So right now they seem to be sticking on the buy side a little bit. They seem to be loading up. If we don't see the market tick higher as a result, that means the sellers have absorbed all that buying pressure, and we may see the market head lower instead. And as a couple minutes yet, for the inventory release, we'll see these numbers get a lot faster and a lot more active, and you'll see this Geiger counter just start to go crazy. Yeah, Tony says, boy, the market makers really hate it when you break out the magic mouse. I know. I told Adam I'd only use it for good. Oh, way to go, Tony. Tony says, by the way, all out on the mid-cap, that's the EMD, one trade today and made twice my daily goal. Nicely done, Tony. Tony says, no more risk today. Yeah, take your money, enjoy it. All right, so the crude oil market here looking a lot more bullish. We're about to produce a late filter entry buy signal here at the 47.61 price. So we'll see whether or not there's actually some follow through to the upside. I'll stay with the OCO order at the moment. And okay, crude inventory should be being announced any moment. Stand back, don't want to get hurt. All right, tiny little numbers, and these are about to explode. Okay, well, we're still only printing warning dots. We haven't actually printed a signal yet. Nice little bounce off the primary support. All right, they're going to try to sell the market down, perhaps. Come on, let's go. Let's take out this low. You know you want to. Well, a fairly tame inventory release. Price is beating up here the 47.05, 47.10 zone. If we see them slip below there, we could see the market continue a little bit lower. Now, one thing as well, if you're ever nervous about your trade, you can force the trade to break even anytime just by clicking that button. Or you can even set your break even higher or lower, whatever the case may be. And if crude oil continues lower from here, the trade manager will just pick it up and keep going. And sometimes, you know, it's interesting to know what you have there in open profit. Sometimes you just want to hit the closeout button. All right, so we're tagged at break even. This is after the inventory release now. We'll just get rid of the Geiger counter for a second. If I wanted to do another OCO type order, I could look to perhaps short the lows. And maybe, where was the inventory release? These are the highs of the inventory report right here. So maybe I'll short a little bit below there and buy just above the median line. So this is what I meant when I said there's a couple of ways that you can handle this. In fact, maybe I'll even short below the secondary support. There we go. Now, crude may or may not take out this range. It seems like the inventory report was rather benign. But that's how the OCO function works. So I won't babysit that one too much longer. Let's get back here to all the action on the NASDAQ. Well, I already rolled my stops a little bit. I may actually let it hold my stops on the high. There we go. I may just let it hold my stops where they were for a little while. There should be another move lower here. I know we're getting some buying pressure coming into the market. But today's bias ever so slightly bearish. All right, we'll put that on the shelf. I just want to make sure I didn't miss somebody's question. Good question, Arthur. Arthur asked, does this work well with Forex? Yes. Any chart you can plot on NinjaTrader, you can use the DTS system for. Now, I don't have the a Forex feed here, but let me see if I can't pull up a couple currencies for you. We'll start with the British pound, which will be your pound US dollar pair. Just give me a second, let that load. All right, so here's the British pound now on the Hawk scalper. Oh, darn yellow bar spoiling a couple signals here, but we did get a first micro-macro cross signal right here. And this is during the North American session as well. So that does change, you know, the follow-through, but we did get some nice moves out of that. Each of these macro pullback signals, doggone it, got spoiled by a yellow bar, which is unfortunate. Another first micro-macro cross back here. Actually, I should be looking during the European hours because that's native for the British pound. So London opens right about here. Beautiful, nice little first micro-macro cross signal. Nice rally up. Get a 4-arrow consolidation / macro pullback signal to follow. That's right there. Another macro pullback signal. Oh, well, this is, oh no, this is still during the European session. This one gave you a little bit of heat, but eventually had some nice follow through to it. So there's the Hawk on the British pound. Here now is the Falcon. And I'll dial back to the London Open, where we had a trend change signal / late filter entry signal. This one's practically textbook. So the filter goes out of sync, comes back into sync. The trend line never changes color. Notice how nice and flat it got through there. Very high probability signal. You could have loaded up on that one and had a nice little ride higher. Great move. Couple quick little trend change signals through here. The market did go out of sync for a bar or two. You may have chose to ignore that and treat it as a rather large late filter entry signal. I'd be okay with that, especially given the trend that the market's in. And kind of flip-flopped you a little bit, came back with another trend change signal right there. So you had a couple opportunities on the Falcon as well for the British pound. And let's see what's going on now with the Eagle. So the Eagle produced a trend change. Why did you not give me a, we got the warning dot, why did we not get the triangle hash mark? Well, that's why we have 3 different tools. According to the Eagle Trend Trader, the conditions weren't ripe for a trending market just yet. It wasn't until right here that all the ducks were in a row. And you can see the market still made a nice trend higher. So yes, it will work on Forex, it will work on stocks, it will work on ETFs, it will work on anything you choose to trade. I'm kind of a dyed-in-the-wool futures trader, so that's why I tend to focus on the futures markets. Good question, Tony. Tony is asking about the late filter entry signal. Does it matter, Tony asks, the width of the time the filter is out of sync? For instance, is a narrower filter more predictable or less predictable than a wider filter? I haven't really noticed any change in probability that way, Tony. Whether it be a wide one or a narrow one, like we see back here. Still a late filter entry signal. What I don't like to see, however, is if you have a trending market, and let's say you get late filter entry, late filter entry, late filter entry, late filter entry. You don't want to see too many of them within a trend. It's a type of signal, it's like our macro pullback signal on the hawk, where you get 2, you get 3, that's okay. But when you start getting 4, 3 or 4 or 5, they lose their potency within that particular leg of the trend. So same thing with the late filter entry signal. You can still take it with a great deal of confidence, but if you're, and this doesn't happen often, but if you're looking at a chart and you get late filter entry, late filter entry, late filter entry, I'd start getting a little suspicious around that 3rd or 4th one. Good question, though. Here we're back to all the excitement on the NASDAQ. I can hardly contain myself. It's summertime. That's how the markets are. As the song says, summertime and the living is easy. Should be summertime and the trading ain't easy. Or my other favorite trading song by Dire Straits, Money for Nothing and Your Ticks for Free. Oh dear, we're scraping the bottom of the barrel today. Come on, NASDAQ, you want to come down. I'm not liking that. We've got quite a bit of volume on this last bar here at this 4810 area. Oh, I haven't mentioned these to you. These are the dynamic equivolume bars. Equivolume charting, for those of you unfamiliar with it, is when you incorporate volume into the bar. So fatter bars have got more volume, thinner bars have got less. So you get a visual of how much volume is going on right now. Why is that important? Well, when the market turns, it tends to have a lot of volume associated with it. As there's a lot more buying and selling activity at turning points. Therefore, you can recognize maybe that the market's trying to turn, at the very least, that this is going to be a reasonably strong area of support. All right, I think I'm going to go with a much more aggressive stop now. There we go. We'll go with the parabolics. The dynamic equivolume bars, by the way, another one of these system add-ons. You don't need the DTS system to take advantage of those. Okay, so we broke 4810, getting a little bit of follow through now as we send some of those buyers scrambling. I'm going to move my break even in a little bit because this should be the next area the market tries to get to. So if we hit 48.06, you're going to see Trade Manager take my stop, automatically roll it to break even plus 10 ticks. So I'm going to lock in $50 profit if in fact the market ticks 48.06. And by the way, the profit objectives are movable as well once the trade goes live. Looks like I could have left my crude oil bracket in play as crude oil broke the secondary support. Oh, NASDAQ just about to hit my profit, my break-even trigger. So you can watch the Trade Manager do its thing. So my stops are up here. Come on. There we go. So we hit the break-even target, and I've set my break-even plus 10 ticks. So even if they bounce here, I still walk away with some lunch money. Come on, you know you want to go lower. Let's just get it over with. Alright, well, we're going to close up the trading room here shortly, so if anybody has any questions or any markets you'd like to see, please don't be shy. Let me know. It's nice the market was a little bit more active today. I found a couple decent trades. Unlike yesterday, oh my gosh, yesterday was just watching the bars go sideways. Oh man, it was tough slogging. The afternoon finally got a little busier, but the morning, forget it. All right, no more questions? All right, I think we're going to shut down the room a little bit early. The markets are really dragging their feet. DTS owners, I will see you in the trading room again tomorrow morning. And a reminder, we will have another open house next Wednesday, so it'd be great if you can join us. And hopefully we'll be able to point out at least a couple good trades to you again and answer any questions you may have about the DTS system. All right, ladies and gents, we'll talk to you later. Bye for now.